Joining us to talk about the market today, Liz Young is still here, Director of Market Strategy at BNY Mellon Investment Management, and so is Josh Brown, CEO of Ritholtz Wealth Management. Liz, another record-setting day on Wall Street. You look at valuations that are historically high. Some say next to interest rates, they still look good. How do they look to you?
I think valuations look a little frothy, or at least fair. I would really be surprised if we didn't see another pullback from coronavirus. We haven't gotten all the bad news yet. People are still quarantined. We don't know really how it affected China in the first quarter economically. And I think right now a lot of the estimates are still too low about how much it's going to shave off of China's GDP. So as we move forward and we get some of that Q1 data, I think we're still going to see some bumps here in the market.
Well, I think the assumption is that it's just going to come right back. That all the lost economic activity, there'll be a lot of stimulus, and once they can contain this virus, China's GDP takes off again.
Yeah, and I don't disagree with that. And we've seen how quickly the market can get over things. But as we know, the market trades on expectations more than it trades on events. So if right now the market is expecting that we might get a couple hits to GDP in the first quarter and then we suddenly bounce back in Q2, it'll be a disappointment if the hit to GDP is larger than the market thinks and if it lasts longer than the market thinks. So we could see this really kind of shake out through the first half of the year.
That's a really good point, I think you raise. And then you ask yourself, like, what is the implication for investors? Well, if we get back into that environment where growth is at risk, GDP is tamer than expected, what do? They go back to the FANGs, they go back to the secular growth stories that do not require overall growth in order to do well. So if that's the case, then maybe we've already seen the beginnings of that because the FANG stocks, once again, are far and away the leading names in the market.
Well, then things get bad and the Fed comes back into the picture yet again. Right?
The Fed's got your back, right? I think the bar is a lot higher for that now. Not that they're not going to watch it, but we don't have much more room to go in rates. They'd have to get creative on how to stimulate the economy, and I really think the bar is higher.
QE 78 because they don't want to invert the yield curve. Because they don't want to invert the curve again. They did that last summer. They don't.
It's happening either way.
But they don't want to be the proximate cause of the next curve inversion. There's really no reason for it. You're at full employment. Labor force participation rate has gotten better. Wage growth is just fine, exactly where you want it to be. There is absolutely no reason for them to do that unless the S&P breaches the 200-day, the tweets start coming from Mordor, and then maybe, but I agree with Liz, that they are not finger on the trigger as I think they were throughout the course of 19.
Got two groups to talk about today, which took us higher and haven't recently taken us higher, and that is energy, which was the best performing sector.
Deep value.
Deep value, but also some OPEC, related headlines there.
Be my guest, you can have them all.
And then healthcare names, we should mention as well, the insurance company stocks. Bob Pisani mentioned this idea that Sanders wins New Hampshire, his odds go up, and then the odds of a Trump presidency go up, so the insurers get a boost, where they had been lower on this idea of Medicare for all. Does that make any sense?
It does. I mean, I think it's really about the odds of Trump staying in office or not staying in office. And if the Democratic Party can't get behind one particular candidate that looks like they could take him out of office, we're going to continue to see reactions like this. But just to be a long-term investor, you can't make investment decisions based on policies that may or may not go into effect from a candidate who may or may not be elected. There's really no sense in trying to chase these.
He's coming out of New Hampshire 2 points ahead of Pete Buttigieg, who is a name that no one ever heard of 6 months ago. I would not be excited if I were a Bernie bro. Like if I were in the Sanders camp, that would not excite me to be in that position at this stage in the game, to just barely be edging out Mayor Pete. Like this is not a triumphant result, even though he's the front runner, the presumed front runner.